Now we move on from the Dow Jones, and we will now talk specifically about the S&P 500. I talked about the S&P 500 a lot, but we are going to really dig into what it is and how it's calculated here today. So what is the S&P 500? This is the Standard & Poor's 500, with Standard & Poor's being one of the United States ratings agencies for companies in the stock market, these publicly traded companies. Okay, and it is what's known as a market capitalization weighted index, whereas the Dow Jones is what we call a price weighted index, because it was weighted by the price of each stock, whereas the S&P 500 is weighted by the market capitalization of each of the companies that is held within the index. Okay, now this index is of the 500 largest publicly traded companies in the United States. It's not an exact list of the top 500 U.S. companies by market capitalization, because there are other criteria that go in to companies being included in the S&P 500 index. Okay, but nonetheless, you will get exposure to most of the largest 500 companies. But in this being market capitalization weighted, right, a company like Apple, I was saying a moment ago, may fall short in its weighting in the Dow, but in the S&P 500, Apple has the largest weighting because it has the largest market capitalization of any company in the United States today. Okay, the index is widely regarded as the best gauge of the large cap U.S. equities, meaning the large companies in the United States. It is the best gauge for what they are doing at any given point. The S&P 500 includes a lot of technology firms and a lot of financial businesses that you cannot find in the Dow Jones Industrial Average. You got to think, with 500 companies, the disparity in size is going to be relatively large compared to something like the Dow, which is only going to be some uber large, uber stable, uber old companies, right? I say uber old, right? I'm not saying that they have to be 100 years old. I'm just saying these aren't going to be companies that have been started in the last 5 years, right? It's not likely that that would ever occur. But in the S&P 500, that could absolutely be the case if a company got large enough that quick. Okay, now to weight the S&P 500 constituents, meaning to determine the weighted average, the S&P 500 uses a market capitalization weighting method, right? And all that they do is they just say, okay, what is the company's market cap over the total of the market caps of all the companies within the index, and that is their particular weighting. Now, the S&P 500 is one of the most widely quoted American indexes because it represents a larger swath of the publicly traded companies in the United States. It focuses on the U.S. market's large cap sector and is also a float weighted index, meaning that company market capitalizations are adjusted by the number of shares available for public trading. Okay, and so this differs a bit from other indexes like the Dow Jones. So when you compare it with the Dow Jones, right, we've done that a little bit already, but it is often the institutional investor's preferred index given its depth and breadth relative to the DJIA. Okay, institutional investors perceive the S&P 500 as more representative of the U.S. equity markets. Furthermore, the S&P 500 uses a market capitalization weighting method, giving a higher percentage to companies with the largest market capitalizations, while the Dow Jones is a price-weighted index that gives companies with higher stock prices a higher weighting. The market capitalization weighting structure is more common than the price weighting structure and really gives more clout to the companies that have done better over time. Now, I've talked time and time again about investing in an S&P 500 index fund, and you can do so via several mutual funds, right? One that I hold myself is the VFIAX, right? That's the stock symbol for the Vanguard 500 index fund, and you could invest money in that. But that does have a minimum. The minimum that has to be put in to start an account there is $3,000 currently. But if you don't want to put out the $3,000 and you still want to track the S&P 500, it's easier to do so through ETFs, and a couple ETFs that are very common that track the S&P 500 that you could buy are the Vanguard 500 Index Fund ETF. So it's the exact same fund, but it's just in ETF form as the mutual fund is, right? And it is $384.44 as I sit here today. So the ticker symbol here that you could look up to purchase this is VOO. And then also another one that I own that I think is very, very useful is the SPDR, SPDR, S&P 500 ETF Trust, right? And this is created by State Street Global Advisors. And this stock symbol is SPY, and it trades for about $418 a share today. And if you can't fish out all that money all at once, there are a lot of different brokerages that will allow you to buy fractional shares, and so you don't have to put up the entire amount of that first share. And I'm sure there are some S&P 500 ETFs that are a bit cheaper, but these are some of the most commonly used and some of the most widely traded in the United States today.